Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your
Well, good
video
day, everyone. I wraps in, and here we are going into the very close of business on Tuesday, the 28th of June, 2011. As you already know, and here we are just about 3 o'clock. The airwaves are full of the protests going on in Athens, which way are they going to vote. And we can look at the market to get an idea. The stock market going for the highs of the day at the very end. It thinks that the vote tomorrow is going to go well. The bonds and notes are down. Now, I don't know if they're down because it's risk coming out of the market because of maybe the market thinking that the Greece vote's going to go well, or because we're coming to the end of QE2 and whoever's going to buy the bonds and the notes may be demanding a higher interest rate to do so. We've got to wait and see that. The gold market and some of the other markets that we look at, if you look at crude, and let's start there, up $2.30. It must think the world economies are suddenly going to get better. What's the bet there? Well, if Greece isn't going off the cliff, maybe that's the case. I know that today I think it reversed a downtrend. In the gold market, the $1,500 level seems to be holding, and you still can't get very far in the silver market. So that I find interesting. In fact, to give you an idea, the gold-silver ratio is still advancing in the favor of gold. Now that ratio, you're right now sitting here at 44.58, and it's not true. We'll get some numbers. And the Bollinger Band is 44.57, so you're literally fighting on this plateau. But silver has not been able to muster anything up against gold. In fact, if you look at the whole thing, the gold chart really hasn't done all that much. This is a chart of the August contract of gold from March. We know that the market shot up, got into the 1580s, and then in May the market peaked out, and we've been working our way down. We still haven't taken out the early May break. This market made its trading range in 5 business days that it has stayed in through May and almost now through the end of June. Pretty impressive. The longer the market can stay in this coil, the more bullish I think ultimately the gold market gets, because I look for an end-of-the-year rally in the gold market still. In terms of just looking at a daily chart, this is hard to do. It's hard to figure out what to do with it, and here's why. What the market did is on the brown line, you can see that the market had a pattern of higher highs, and that was all fine right through there. And that was on, by the way, June 21st. The market then went up higher and falls apart on June 23rd. Now think of this pattern. You've now got a market that's got a higher high, but this low takes out that low, and you're under the red line, which is the line in the sand. When you're under the red line, one should start looking for potential sell signals, not buy signals. When one is above the red line, look for potential buy signals. This is a change of character. That's my general rule, and that's how I teach charting. Okay, now we look at the market. It keeps coming down, and you finally start getting a bounce today. It's not a trend change. It's a bounce. I don't know where the market's going, but it's very difficult to call out here and say, oh, look at how well it did. If you think it did well, it was just 1559 1, 2, 3, 4, 5 days ago. I mean, it's down pretty hard in that period of time. So a bounce is likely. 1530, the red line's the resistance point. Even if the market rallies, another resistance is the 45-day average at 1522. Okay. So if the market kept going down, it's cut through the 45-day average, didn't quite get to the 100. Where's the next potential support if it's neither of those numbers? And what I do is I look at the Bollinger Band, and it's right here. Now, for the past couple of days, the market has settled underneath it. The odds of a market staying under a Bollinger Band, so you know, are 2.5% of the time. You heard me. Means 95% of the time is what it means. The market's going to trade within the bands. When you get out of them, it doesn't mean you're getting a trend change. It just means the market might be moving back into the band. That's all that happened today. No more than that. This is not the beginning of a bull market as I see it at this point. But the market did define 2 things. It, number 1, got stretched out under the band. Number 2, it got itself into oversold territory. That's all that I can say about it. an oversold bearish break. How high this rally goes will be a measuring rally. I doubt seriously it's going right through 50 and 59.30. I see too much resistance above it, so I think the bears that own some supply might be waiting for the market there. In the silver market, it's the same thing. All you did is crawl back over the Bollinger Band today. When people get bearish under these bands, and you heard me say this yesterday, I said, watch out. This is an extremely bearish chart formation. Extremely bearish chart formation, especially if it breaks out to the downside. The way that I think it breaks out to the downside is the stochastic study, the brown and the red line, both get under 20 and stay there. If that happens, I think it's Katie bar the door. Conversely, break out the top side, and I have a different theory. So right now I see resistance near $38, and I see the market in a downtrend trying to push itself lower, but oversold. The copper is in no man's land. It is totally neutral. Remember what I call the red line. I call it the line in the sand. The parameters of the market are right here. What do I like about the metal charts? Notice how we're developing sideways action in the black line there and in the silver. The longer they stay within that area, just think of somebody in an old movie cranking up in a steam room, and they got all the steam coming in, and it's getting ready to let go. There's going to be a move. That's what I look for to happen. So right now the volatility has come out of the markets. That's another way, and nobody's mentioning that. I am. This means volatility's out of the market. But the longer the volatility stays out, behind it, there's also this pressure building on prices. And that's another thing that I think will happen. This is the crude oil versus the WTI. So we've got the Brent WTI, and this is the spread. Used to trade up right through here, 50 cents. It got down near $20. It's now trading in the neighborhood of $15.70, just to give you an idea of the two. Today we saw the energies move upside too, which surprised me. And I think that what the crude oil did, in all fairness, I think the crude oil knocked the guys like me that were bearish out of the market in terms of their trade recommendations. I don't think the trend has changed. I think it was a trap today, and I think it's going back down. So we'll see if I'm right or wrong, but if that stochastic stays just the way it is with both numbers under 20, no. I think this is a trap, and I think that, very frankly, I think the pros are going to look to get short again. We'll see if I'm right or wrong. This is the Brent, which is a whole different world. It doesn't have an embedded stochastic. It bounced yesterday back over the Bollinger Band, followed through today. I think the resistance is a bit higher here towards 113. And if you'll recall, the index where the IEA came out and said that this 60 million barrels or whatever of oil, I think the index was in the 112 area at that point. So I don't see why the market would have much upside there, but we'll find out. Maybe I'm wrong. In the gasoline market, you stayed under the Bollinger Band for a couple of days, oversold, and magically you're thrown out back to the upside. What's so magical about this? This is a market that's oversold, getting a bounce, coming up. All right, so I don't see any change that has happened at all in the energy complex other than it knocked out some of the short players. Okay. Now we have to see what Greece does. What do you think Greece does? Let's assume that there's a no vote by the Greek parliament. And remember, you have two votes. You got one to pass the measure and then the other to vote it into law. So you can pass one and fail on the other. But let's assume there's a no vote. Well, there's going to be a lot of world problems. So what we want to see is a yes vote. And why? What do you gain out of a no vote? The Greek people sooner or later have to get their austerity measure together, if you think about it. Why not give them time to do it as long as these measures are put into place that they can live with, but there are real measures with some teeth in it that everybody comes to the table? I mean, this idea that we're not going to do this, we're not going to sell our assets, we're not going to do anything, and yes, we're going to go back to our own currency and deflate it. Who's going to buy their debt? Who's going to want to touch it? Nobody. So I'm hoping reason comes in at the end of the day, and we trade the commodities back off the charts. In the meantime, I'm going to be writing and talking about it. And I'm tired of it, but you got to keep going. So I'm putting out my twice daily recommendations and phone updates. But the phone updates also tell you when I publish a webinar. And in a webinar, I cover 39 to 40 charts. And it's like sitting at my shoulder, and I walk you right through them. And the written recommendations back up with what I'm doing, and I give very specific. Buy here, sell there, here's the stop, and here's the promise I make you. You're going to see losing trades. I'm not going to say I have winning trades. I promise you I'm going to have losing trades, because the only person that doesn't have losing trades is the person that trades 1 or 2 times. Maybe they get a couple of winners, but if you trade more often, you have to get it. And you have to let that go off you, and you have to have controlled risk, and I talk about that in these recommendations. How do you get access to it? It's simple. I want to give it to you free if you've not tried it before. If you've tried it before, forget it. You've seen it. There's reasons to open an account with us, become a subscriber, and all that. Other than that, I want to give you the charting service that you see behind me, access to the research, which actually can play right through it, the different trade reports, the Lynn Group research, and, of course, the charting software. How do you get it free? 1-866-973-2077. Or go to our website and sign up for our futures trading kit. We'll put it in your hands. I make you a promise. The amount of research we're going to put in your hands, I doubt that you're going to see it anywhere else. In fact, it's a challenge. I'd like to see you get it from another firm as much as we make available to our customers. With that, I'm Ira Epstein. Have a good day and get ready for the Greek situation. It's right in front of us, and tomorrow's going to be exciting.